Hi everyone, welcome to another Forex Trading Forecast. My name is Justin Bennett with Daily Price Action. And in today's Forex Trading Forecast, we're going to look at the euro versus the US dollar. We're also going to look at the pound versus the US dollar, as well as the Australian dollar versus the US dollar. We're going to talk about the euro versus the pound, as well as the pound versus the Canadian dollar. You're going to want to stay tuned because I do think we have some great opportunities this week, including the Australian dollar, which could be on the move. So let's get started right now. Before we begin, be sure to hit that subscribe button below and also click the bell icon so you get notified every time I post these videos. Alright, starting with the EURUSD, this is one that we discussed last week, and what I mentioned was that this 109 area was likely to attract buyers. And the reason for that, if you're new here, this is a descending channel that dates back to 2018. So notice how we have these two highs right here, as well as several lows that make up the bottom of this channel. So notice how last week the euro bounced right from that channel support. This is the reason I mentioned in the last Forex Trading Forecast that I did not want to sell the euro, because it was trading just above that channel support at 109. So for the week ahead, I think this level will continue to attract buyers, and we could get a rotation lower now that the pair came into that 109.90 area that I also discussed in last Saturday's video. So this channel support down here could continue to act as support for the week ahead. And as far as a bullish breakout, in my opinion, it's going to take first a close above this 109.90 level. So it's going to take a daily close above this. However, to really get the attention of would-be buyers, the Euro USD is going to need to close above this descending channel resistance. So until this 110 area breaks on a daily closing basis, I do think that the euro could remain under pressure. But again, any rotation lower could once again find support at that 2018 channel bottom. So right now, that level could be as low as 108.80, maybe 108.60. But again, I do think that downside is capped here as long as the Euro USD is trading just above that channel support area. So longer term, I'm still bearish the euro, but I do think that it's going to take a move higher before we get that next leg lower. And again, I don't want to sell the euro while it's down in this area. I would rather look for a selling opportunity at higher levels once we do get that breakout and a move higher. Because right now, again, the selling down here is unfavorable in my opinion, because the downside is going to be capped as long as we're above that level. And I do think that this could offer an opportunity both ways. So in other words, a break of this descending channel resistance could offer a long up to 110.70 with a break there exposing 112. And at the same time, if we were to get bearish price action at either of these areas on the way up, it could offer a selling opportunity for a move back down, because again, the longer term trend here is still very bearish. And lastly, I do want to point out that if we were to get a rotation lower this week into 108.50, all right, so if the Euro USD sells off from 109.90 this week and rotates lower into this descending channel support, and let's say we get an intraday spike down here into 108.50, I do think there's a good chance that we could see some significant buying pressure in this region. So look back to 2017 to see why 108.50 is significant. But if we do get a retest of this area, I think it's going to attract a lot of buyers and could also give us that opportunity for a move higher into this resistance area that could then trigger the breakout. So I guess what I'm saying is it could take another move lower before we get that break of the resistance area. Next up, we have the British pound versus the US dollar. And notice how this thing bounced right from the support area we talked about last week. So remember that I drew out this ascending channel in the last Forex Trading Forecast. And I said that this 122.40 area could attract buyers if tested. So I said if we get an intraday spike below 122.90 into that 122.40 area, we could see buyers come in and prop up the pair. So notice exactly what happened. So from here, again, it's going to take a daily close above 123.80. So notice this level right here. It's going to take a daily close above this week in order to extend this relief rally higher up into that 125.70 resistance area. But here's the thing, I'm not fully convinced that the pound is going to rally this week. And the reason for that is, look at how the price action last week hovered just above this confluence of support, but never actually managed to make much headway. So buyers had a hard time here at 123.80. And this type of price action right through here is what I often call heavy price action. So what that means is that every time buyers come in and try to prop this thing up, sellers are coming in and pushing it lower. And that can often signal a breakdown. So again, until buyers can get above 123.80, I think you have to be really careful here if you're trying to buy the British pound. That said, it's still going to take, in my opinion, a daily close below this confluence of support. So right around 122.90, okay, it's going to take a daily close below that area in order to turn the pound versus the US dollar lower and expose that 121.70 area. So until we get a daily close below this area, then I do think you have to respect the potential, at least, for another push higher. All right, so daily close below this area would expose 121.70, while a daily close above 123.80 would extend this relief rally back toward those recent highs around that 125.70 resistance area. And again, just like the Euro USD, this thing is in a longer term downtrend. So keep that in mind if you're trying to buy the pound, because for all we know, this could be just a correction. All right, so this relief rally could just be a correction within this longer term downtrend. So if we do see a break below this confluence of support, this ascending channel could act almost as a bear flag and trigger the next leg lower, just like we saw back through here. All right, so keep that in mind if you're trying to buy this, and recognize the fact that the pound has been trending lower now for several months. In fact, it's been trending lower now for several years. So if we take a step back and look at this, notice how we've had these impulsive moves lower, followed by these corrections higher. Okay, so this could be just another correction, just like we saw through here and just like we saw through here. So if that's the case, then the pound may be limited to the upside and could also offer an opportunity in the weeks ahead for that next leg lower. So just to recap, as long as this 122.90 area is intact as support, we have to respect the potential for a move higher, but 123.80 is going to continue to attract sellers until we see a daily close above it. Break below 122.90 would expose 121.70. A break above 123.80 would expose 125.70. Next up, we have the Australian dollar versus the US dollar. And this is one I haven't talked about recently, simply because I haven't favored the price action. So notice how this period for about a month, the Australian dollar really went nowhere. It just chopped around within this range. And this is the type of price action that I tend to just stay away from, because you're going to get chopped up in this. There's no momentum here. Buyers aren't in control, sellers aren't in control. Right here, we're just waiting for a favorable move. And I could almost say the same thing about this recent price action through here. So again, buyers or sellers are really just kind of trying to figure out where they want to take this thing. And this is when I like to stand aside. However, last week's price action did something interesting. So not only did the pair come back here and retest this descending channel support. All right, so this is actually a level that I mentioned back when the pair was trading within this ascending channel. So I wrote about the Australian dollar right back here, and we were actually selling this with a target of 67.50. And notice too how the Australian dollar versus the US dollar never actually closed below that channel support. And it did the same thing last week where it bounced right from channel support. Now, if we turn to the weekly time frame, notice what happened. So that support area triggered a bullish pin bar. So notice this is our bullish pin bar right here from our key support level. So a pattern like this, at least in my experience, tends to trigger a move higher. So if buyers can get behind this bullish pin bar this week, we could see a push up into 6,800 and perhaps with a break there exposing 6,880. Now, one level I would keep an eye on as far as support comes in at these recent lows. So if we go back to the daily time frame, notice how these lows right through this area. All right, I would call this a must hold support level right around 67.40. So this is a must hold level for buyers based on some of these recent lows that we've seen. All right, so a rotation lower into the 67.30, perhaps 67.40 area this week could offer a buying opportunity up into 6,800 with a break there exposing 6,880. Now, this 6,880 area is one of those where if you notice back here, it got really choppy. So the question then becomes, should this level go up here or should it go lower, closer to these lows back in this region? And this is where I like to use the weekly time frame, because notice how we have this high right here. So these swing highs, but then we have these lows. So if I draw another level to include these weekly lows, we actually get an area between 6860 and 6880. So if we do get a push higher this week or the week after, and we get that close above 6800, followed by a push up into this area, I would say anywhere between 6860 and 6880, we could see sellers come in and try to push the Australian dollar lower. But again, it's all going to depend on what happens around that 67.30 to 67.40 support area in the week ahead. The euro is trying to break out against the pound, and in fact, given this terminal pattern that we've seen, so this short-term ascending trend line along with this descending channel, the pair is going to have to make a decision here. And on Friday, I wrote about this one. It looks as though the pair closed above this channel top. However, one thing I wrote on Friday is that this 89.20 level needs to break on a daily closing basis before we can call this a true breakout. Because I don't want to buy this right now while it's below 89.20, simply because we can see how sellers have been coming out to push the pair lower. So until we can get above 89.20, I have to be at least a bit skeptical about this breakout. So a close above 89.20, as I wrote on Friday, would expose this 90.15 area. So notice how this thing acted as support and then it served as resistance, with a close above that exposing 90.90. So this is something we talked about in last week's Forex trading forecast. Notice these lows as well as several highs back here in August. Now, that's the scenario that could materialize if we get a daily close above 89.20, followed by a retest of the area as support and a push up into 90.15. Now, if the pair closes back inside this channel this week, so if we see the euro weaken against the pound this week and start to push lower into this ascending trend line, that could be the signal for the next leg lower. So again, daily close below this area could trigger the next leg lower within this descending channel. And a break lower, in my opinion, would first target 88.40, followed by 87.60, and then 86.80. All right, so a close below this short-term ascending trend line would first hit 88.40 with a close below that, exposing 87.60 and then 86.80. But it's all going to come down to how the pair reacts following that Friday close above the channel top. So again, I'm just going to stand aside for the first 24 hours this week, perhaps even the first 48 hours, depending on what happens below 89.20 and above this trend line. All right, so I'm just going to stand aside and see what happens here. And if we get a close above 89.20, I'll look for a long trade up to 90.15, perhaps 90.90, while a close below this trend line could extend the pair down toward 87.60 followed by 86.80. All right, I saved the pound versus the Canadian dollar for last, and for good reason, because this is one that we talked about in the last couple of Forex trading forecasts, and so far, technically speaking, the pound versus the Canadian dollar is playing out incredibly well. So I wrote about this inverse head and shoulders several weeks ago, back when the pair was trading through this area, and we got this 300 pip rally that played out great. It also stalled out right at 166, which was a resistance area that I wrote about in that post. So since then, the pair has pulled back rather aggressively, and last week I discussed this 162.50 support area. So this is where Friday closed, and I said that if buyers come out and support the pair around 162.50, we could see a push back up into 163.30 with a close above that re-exposing 164.30, perhaps 164.40. So look at how nicely this thing has played out so far. So we did get a close above that 163.30 level on this candle. The pair rotated lower, retest 163.30. It pushed higher on Thursday, but look at what happened into the close. So notice how the pair was not able to close above this level. So that was an indication that we would likely see a retest of this 163.30 level, and I pointed this out in the members area. Notice how buyers then came in and pushed the pair up on Friday. But once again, this 164.30/40 area is going to attract sellers this week. So until we get a daily close back above this area, all right, and a bounce from it to return back to 166, I do think that the pound versus the Canadian dollar could stay under some pressure early this week. So if we see a daily close above 163.40, so close above this level, we could see a push back up into 166 with a break there exposing the measured objective of this inverse head and shoulders up around 168. Now, I also wrote about and discussed in last week's Forex trading forecast this ascending channel. So notice how this ascending channel that extends from this swing low back here has so far played out really nicely. And again, notice how last week's low bounced right from channel support. So as long as this channel is intact, I think we have to respect the potential for additional gains from the pound versus the Canadian dollar. But if we do see a close below 163.30 this week, that would be a sign of weakness in my opinion, because it would re-expose this support area with a break below that, negating this pattern, this inverse head and shoulders, and also re-exposing some of these lows back through August and September. So these two levels at 163.30 and perhaps around 162.00, these are two must-hold levels for buyers. If we see these break down, this pattern would be negated. And again, if we see a close above 164.40, that would expose 166 and would also keep this relief rally intact and expose that measured objective up around 168. So either way, it's going to be interesting to see how this one plays out, and it's all going to come down to what really happens within this range early this week. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.